Welcome everyone to our small business webinar series, the Tory Burch Foundation. I am Desiree Brown, Senior Communications Manager, and we are so excited to have you joining us. Please use the chat function to connect with each other and make sure that you save all of your questions for the Q&A box. Today, we are getting started with data-driven decisions. I'm so excited to have Dasanj Aberdeen return to our webinar series for the second time. Dasanj is an innovation product and new venture creation leader, consultant, creator, and polymath. She is a creator with the heart, or at heart, sorry, with the love of art, writing, photography, travel, health, wellness, and French. So with that wonderfully diverse background, she is really going to help us dig into how we can make data-driven decisions for small businesses and help us have an approach to numbers that works for even the creatives among us, people who are maybe a little bit nervous about numbers. And so we are going to have plenty of time for Q&A. So again, please make sure to put your questions in the Q&A box and we'll get to as many as we can. Also, today's session will be recorded, so please watch your inboxes for the replay link. And with that, Dasanj, over to you.
Awesome. Thank you so much, Desiree, for this amazing introduction. Hello to all of you, wherever you're tuning in from. Super excited about this topic. And Desiree gave us a great lead up here. My goal today is to have a session, right? Understanding that we're all coming from different backgrounds. There are people who love numbers. There are people who don't want to see numbers and get nervous and start sweating. The goal here really for you all as founders of your businesses, of your product, to really help enable you with the decision that you need to make. We want to have smart founders. We want to make sure you're enabled to do the right thing, do what makes sense for the business, make those hard decisions, be able to move your business forward, whether you're just starting or you're growing, looking to mature it further and get out into the market with additional customers, really help enable that process. So on the one hand, you'll be focused on what is strategic for your business, but at the same time, you'll also want to look at, the details of it as well and getting into that. So this is what we're going to run through today. So as I pull up the slide here, so you'll see this is the agenda that we're going to cover today. I really want to focus on understanding kind of where you all are and make this conversational, right? So make sure you're using the chat, make sure you're asking questions, sharing ideas with each other. Some of you may be using data in a certain way, you may be using certain tools, certain metrics for your business. Want to make sure all that comes out. So it's both a learning session, but also a knowledge sharing session as well. So the first question I have for you all is, what kind of founder are you and how do you approach data? What is, how do you go about deciding what to use for data? Which metrics do you use? So I'd love to see in the chat you all sharing kind of where you stand. So the big question I have here is, do you find yourself to be data-driven or do you consider yourself to be data informed, right? A lot of the times people wonder, should you just blindly follow data? Is there a way that you can, how much attention do you give the data? Is it solely on the numbers that you rely? So that's some of the things that we want to talk through a little bit. So, as we have here, you see the two approaches, right? So being data-driven or being data-informed. And what exactly does that mean? So data-driven really is the idea that data is the end-all be-all of everything, right? So generally speaking, with an actual example, that would mean that if you have data sets, it's looking at, A or B and making that decision based on that, right? So you might be familiar with doing A/B testing on, let's say you have a landing page that you're designing for your business, or you have two different products, maybe they're at two different price points, and it's A or B, right? Nothing else, and really just allowing that decision to drive what it is that you do. And so the benefits of a data-driven approach is it makes it a little easier. So if you are a little shy when it comes to using data and making that decision, you can truly rely on what the data is telling you. You don't have to rely on your gut. There's no emotions in there, no fear around that. You're solely saying, okay, the data is telling me to do A, and I'm going to do A, and I'm not going to do B because that's not what the data is saying. So this may be considered very proactive as well, but it does have some drawbacks, right? So the main problem with this approach is that it doesn't necessarily take into consideration some of the other factors or some of the bigger picture things that you might need to consider as well, right? Because it is just A and B, it doesn't give you room to really bring in more than that. And so depending on where your business is as well in its process, having enough data to do this is going to be important. So if you don't have enough data, if your data isn't quality data, obviously this is going to be a challenge. And that's not something to feel that you're lacking with, because even large organizations still are grappling with data and making sure that they have the right data and it's cleansed and it's something that they can trust and rely on. And then when you think about being data informed, so this approach means that in addition to what the numbers and the hard data is telling you, you're taking other things into consideration. So things such as your user research, your own personal experience, what you know is going to work for your business and what has worked for your business before, and even your personal insights as well, right? And being deeply rooted in knowing your customers, that's another thing that you can bring into consideration. So it's not necessarily quantitative alone, but it can also be qualitative as well. So in the prior example that I mentioned, right, let's say you have two products and it's a matter of, doing some A/B testing and it's A or B. Well, maybe the decision isn't to pick one or the other. Maybe you can have both, but you can have them at different price points, for example. So it allows you to have a product that meets the market for different segments of customers, but you're still able to do that in a way that makes sense for you. And it's not just a linear decision between one or the other. So the benefits, again, with this one, as opposed to being data-driven alone, this allows you to see the big picture. As a founder, you want to obviously be in the details. You want to know what's going on, but you want to be ready to plan ahead. You want to get ready for growth. And that requires looking further out, looking bigger picture, being a lot more strategic. And this metric, or this approach rather, allows you to do that. So, I think leading up again to kind of Desiree's intro, it's a combination of a little creativity, a little technical to help you get there. And at the end of the day, it really depends on what makes sense for your business in terms of what that decision is going to be. So what are some drawbacks for this one? Well, because you're infusing more than just the hard data, if there are multiple people involved in the process in making that decision, this may be a little challenging, right? So if you have different stakeholders and they have a different perspective based on the qualitative aspect of it, you may find yourself in a situation where it's just hard to lock down what the decision is and get everybody on the same page. So ultimately, though, data is important, right? And as you can see here, there are a couple of reasons for that. It obviously helps you uncover different insights that you may not readily see. It helps you validate your hypotheses, especially when you're starting out early. You may have an idea, you may love your product, but do customers love it? Are they willing to pay for it? And those are things you might need to go out into the market and validate. And this allows you, as you're getting data, as you're testing out your different features, to learn from that feedback and then have different product iterations, right? So it allows you to build forward and take all of that good insight and turn it into actual product requirements that you can launch at a future point. And ultimately, be in business means, you have your operations in place and that you're profitable. So this helps you measure success as well. Now, what you don't want to do as a founder is really, get to the point where you are just kind of following just solely data-driven growth. Again, like I said, you want to make sure that you are using the good information that you have and using all of that within the context of your business. So it takes us back to the question, right? So should you be following data blindly? How much attention do you give it? And it really, again, comes back to what is the strategy for your business? What are you looking to accomplish as a founder? And those are some of the big things. What is it that you want to measure? And once you have that, then you can figure out, which metrics make sense for that. And to support those metrics, that will actually tell you what the specific data points are that you might need. So, here is a little bit of, again, some of the things that you'd want to make sure that you are driving towards so that you have success in your process, right? Some of the common pitfalls for why businesses fail, especially early on, is around, things related to cash flow issues, issues around just overall demand for your product or your service. So, if you don't understand exactly what it is that customers want from your product, if you don't understand the needs of the customer, those things come through. Limited competitive research is another point. Being able to understand, where the market is, where your competitors are, those are all very important. And so taking an approach here with data that allows you to really understand your product market fit, understanding how you can scale, because that's important to grow and have your products and your business be exposed to a broader market and a broader customer base as well. And then understanding the flow of money, because at the end of the day, you do need to manage that. You want to make sure as revenue is coming in, it is actually turning into profits. They're not the same thing. And so it's important to really focus on these three pieces so that you do see success. And that's kind of what we're going to talk through a little bit, as we go through the rest of the time here. So, there we go. So this first few, so how I'm going to approach this is to really kind of walk you through the life cycle of your business and your product. Now, you all may be in different stages. Like I mentioned, the key goal here is to understand what questions you need to be asking at what stage of your business you're in. So this bell curve that you see here, it's based on the book Crossing the Chasm, which really focuses on the different challenges that startup companies face as they transition from being early adopters and having customers who are early adopters to customers who are more mainstream in the market. And you can see the gap that's shown here. Ultimately, you want to be able to cross that gap, right? So early on, you're starting where that focus is on that product market fit and making sure that you're capturing feedback and getting insights from customers to help you move forward. As you go from there, you're in your early majority stage, and the big focus here is on growth. So you're expanding your customers, you're scaling, you're figuring out how to remain competitive against other products in the market. And so it's really important here that you start focusing on value and revenue and monetization. This is going to be crucial as you become more mature. And, as you do that and you move into that late majority stage, the focus here is on retaining your customers. So all those customers you got during your growth stage, you want to keep them happy. You want to make sure they continue to be loyal. So customer satisfaction is really important, and being able to manage your churn. So churn is, when you lose customers over time. You want to make sure that you understand that so that you can stop that spillage and make sure that you maintain those customers as you move forward. And then on the back end is, depending on your plans for the business, are you strategically going to pivot to something else? Are you going to re-energize your products? Are you going to exit the business, retire certain products? Those are things to consider at that point. So again, the priorities here is around your product quality, right? Customer acquisition as you're growing and retaining those customers, and then really honing in on that monetization piece where you're getting revenue, but you're also making sure that you keep that revenue and you're profitable. So the questions here to ask is, how do you measure your business? And what are the key performance indicators that you should be using? Those are your KPIs. And what's the formula for your KPIs? And lastly, again, like I said, once you understand what those KPIs are, you can determine what that underlying data is that you'll need for your business. So we'll start here. This is your MVP stage. And to Desiree's point, this is where the last session was focused on. It was, being able to start small, starting with that MVP and having something that you can put out in the market that is usable by your early customers, that helps you validate your business idea and provides you with that feedback that you can use as you go forward to determine how do you continue to enhance and develop your product. So your real goal here is to have something that people love. You want a product that your customers are absolutely delighted by. Yes, you want to make sure you meet their needs, but beyond that, you want it to be something with some features that they didn't anticipate. And it just brings to light, it excites them and has them, being raving customers for your business, because referrals end up being very important as you make that transition into growth. So, you know, again, as you move forward here beyond your MVP, this is where you could potentially be focused on getting more funding, on adding additional features, improving that user experience, improving your user interface, depending on if you have a digital product, and really kind of figuring out your pricing, because that's going to be important as you scale and as you secure additional revenue. And the last piece is really about just broadening your market. You may start with a smaller target market, but you may find an opportunity to grow beyond that based on your research and who may have an appetite for your product to really scale. So some of the key metrics that are important here is you might use surveys. Getting customer feedback is super important, both from a quantitative perspective, but a qualitative aspect as well. Your net promoter score, you can ask your customers, how would they rate your business? How do they rate the product? And this really gives you an indication of, which ones are just raving fans for you. Activations are also very important at this point, because you can see who is signing up for your product, who is, making purchases, things like that. And if you have a digital or software business, being able to see who's engaging, who's actively on your platform, which links are they visiting, which pages are they visiting, that's also really important. And then to round it out, beyond just looking within your business and looking more broadly, is that competitive intelligence piece and also your market intelligence piece. So what are trends that are happening in the market? What are your competitors doing? Which of their products are similar to yours? How are they doing anything different? Are they offering different solutions? Do they have gaps in their solutions that you may be able to fill when you introduce a new feature? So things like that can really help you, round out what it is you need to focus on from the MVP stage in your business, and being able to make sure you get the most data. Again, the focus really here is on validating, it's on getting that feedback that will save you time and resources as you move forward and as you scale. So the next phase here is around, and I broke this out specifically for those of you who are in the process or considering funding. So this is around, when you are at that point that you are engaging with investors and having those conversations to figure out if there's an opportunity for them to fund your business. And so what's important here, right? As an entrepreneur, as you're launching your business, it's important to prove that you do have a good business concept and a good idea. And what you want to be able to demonstrate here is that you have a potentially scalable idea for a product or your service that is focused on a certain market and can generate value. So, you want to be able to prove that you've created a solution to something that customers need, right? And it's a product or service that's going to be useful to them. It's something that they need, but you're able to really give them a good experience during that process as they're engaging with your product. So a couple of things that are important here in terms of metrics and what an investor would be looking at. Certainly an investor would be interested in understanding the problem, understanding what the opportunity is, exactly who is your target audience for this, and being very specific about what it is that they need and what kind of problem are you solving. And also they would want to size the opportunity and the problem, like how big is it, right? And then also what makes you position your product differently from what else is out there in the market. So how are you differentiating yourself? And so to that point, you're also looking, again, to answer that question, you're looking at what competitors are doing. You are looking at, your users and getting very intimate with who they are, exactly who your audience is, understanding exactly who those personas are, what do they like, what do they dislike, what are their pain points, having conversations with them, being very close so that you really know what is going to separate you from everybody else. The business model is also really important here because you are defining that, you're figuring out who potential vendors are, what's your pricing going to be, what's your cost structure. All of those things are very important. And you can see the components of it here on the left with the business model canvas. It's a great framework to just kind of lay out what it is that you need to be looking at as you're basically planning out the different portions and components of your business. So the representative metrics here, and some of these I kind of talked about a little bit, but specifically you see TAM, SAM, and TOM and SOM here. These are the ones where you can use to size that opportunity. So what is the total available market? What is your serviceable available market? Those are different things, right? So your TAM is really like the overall total market demand for your product and service, whereas your SAM is your serviceable available market, and it's a segment of the TAM. And then lastly is the serviceable obtainable market, which is a portion of the SAM. So it gets even more narrow and a lot more specific. And this is where you would be focused in terms of who you would be targeting. Customer acquisition cost is important here. And this is really important as you continue to grow. There is a cost to getting new customers. So if you can create a product that people love and they tell their friends, they tell their cousins, and it happens organically through referrals or even a viral effect, that's great because that saves you money. But if you have to spend money to do marketing, run different ads and things like that, there's certainly a cost. So that's something that you want to be mindful of. As people are coming to you, as you're getting potential customers, are you actually converting them, right? So let's say you have 100 people come onto your website. How many are actually making sales? Is it 50? Is it 10? Is it 20? That conversion rate is going to be very important. And of course, you want to have that to be higher as opposed to something that's lower. Your working capital is important. And that goes closely with your burn rate as well. So your working capital is really your difference between your current assets and your current liabilities. You want to make sure you have money to be able to sustain what you need to do as you're starting up. And here we also have your burn rate. That's really important. So how quickly are you burning through the available cash and assets that you have? That's going to help you explain and understand what your runway is and what timing you need to have certain things done by, when you need to scale the product by, so you can start seeing profitability and make sure that your business is not at risk. And then as you look forward as well, investors would be interested in seeing your revenue forecast. What is that projection looking like in the next year, in the next 5 years, in the next 10 years? Are you able to demonstrate that you truly can scale the business? That's going to be very important. And then from a customer perspective, as you understand your revenue, how much are you actually getting per customer, right? What is your average order value as people are making purchases of your product? So those are some of the things, as you're in that early startup stage, as you're looking for funding, as you're having those conversations, those are things you want to be very crisp on to make sure that you have a good handle of where you are, and also being able to communicate in those discussions where it is that you're heading. And so your numbers will be very important, after the research that you've done, to the projections that you've done to help tell that story as well as you're pitching. So in this phase here now, and I've kind of combined these two primarily because once you have these metrics set up, it's a different focus if you're in a growth phase and if you're in the maturity phase, but a lot of those metrics can be used as you go forward. So as you're in that growth stage, right? So you're moving, you have a product in place, you've validated it. Now the goal here is to really scale your business and do so in a quick way. This is where you can look at expanding into new markets. Like I said, you may have started with a specific customer segment, maybe in that specific SOM where you're starting. But there might be an opportunity, whether it's geographically or just different demographics of customer, where you can really expand what it is that you offer. And maybe it's also through a different type of product. Maybe you have a portfolio of products so that you can meet the market and different segments of the market. So again, this allows you to really grow. And that's really the focus of this stage. And as you mature, the focus here becomes more around staying profitable. So really making sure that you are stable in your business. You're not concerned about payroll. You're not concerned about some of the day-to-day expenses that you'll have in terms of just the cost in operating your business. And at the same time, there's competition, right? So as you get more mature, competitors have seen, kind of where you are in the market, they're sizing you up. And so it's important to continue to have that, that hold and really understand how you're differentiating yourself, how you're differentiating your product. And as you see here, there's a SWOT analysis on the left, and that's always a good tool because it helps you look at the market and understand where your strengths are, where your weaknesses are, so that you can make good decisions at that stage to continue to stay profitable. So this is, again, the big focus here. And as you're growing, right, and as you're growing quickly, you want to make sure that you are doing so without significant loss. So that's why it's going to be very important to retain not just your customers, but also make sure that you are retaining as much of that revenue as you can so that you can demonstrate that you're profitable. And so some of the metrics here to speak to that exactly is your sales revenue. What exactly is coming in and how much? And you can look at this from a monthly basis. So that can be your monthly recurring revenue so that you understand what that is. And what is the number of users that you have from a monthly active user basis. And those two things go together really well because then that helps you kind of understand based on the number of users, based on how much they're purchasing, right? And how much revenue you're getting from those users, you're able to look at it more broadly and say, overall, here's what my monthly recurring revenue can look like. I can use that to project out. And then beyond that as well, beyond just monthly is also your annual recurring revenue at the same time. So as you look further out, what can you expect, especially as you look at changes that might be happening in the market, maybe different trends that are happening. Customers may have different desires. There might be technology impact as well. Interest rate, all these things are part of the consideration. But as much as you have a good sense of what's happening in your business, then you can factor in those others and see where everything falls out. And ultimately, this all comes down to key accounting metrics here around your gross, your operating, and your net profit margin. And on the on the other side of that is churn. Like I mentioned, churn is something that you want to be very mindful of. If you're losing a lot of customers, that's obviously going to impact where you are with your total number of customers, but it's certainly going to impact your revenue as well. So during this stage, when you're mature, you're really tapping into things like loyalty programs, doing different activities that may help retain your customers, engaging in them in a different way than you did early on. Like customer satisfaction continues to be different, continues to be important, but you're doing so in a way where you are really aligning with the objective and goal of this phase, which is really about keeping your customers, keeping them happy, keeping them coming back. Because like we mentioned before, the cost of acquiring new customers is a lot. So you want to make sure that you manage that as much as possible. So now we're going to get into some examples of what this actually looks like in the market, right? So if you think about some real examples here, but also case study type examples. So these images here are actual pitch decks from companies that you'll recognize, and you can see how they're using some of the metrics that we've kind of talked about a little bit. So in the Airbnb example, you'll see that they've broken out how they're sizing the market. They're looking at TAM, they're breaking it down to the SAM, and they're also breaking it down to SOM so that you can see, as they're having conversations with investors, how big the market is. Investors want to know that there are opportunities out there. They want to know that there's a big enough market, but you're not going after the entire market because that's probably not realistic. But you do have a very targeted approach to who you're going to, promote your products to and your services to. And there's a path to get there. That's going to be very important. If you look at the Uber example here, they're demonstrating, revenue and where it is. They're also showing, which is very interesting, they're also showing through what they're describing, an underserved market. So that really demonstrates that there's an opportunity here. And they're outlining just the overall growth that's happening, as you can see. And then again, the overall possibilities there for their product and their business. If you look at the Dropbox example, they're focused here on, in this example, on customer acquisition, right? So early adopters, using influencers, using a freemium model, the viral elements here, those are all smart ways that you can, again, get those customers, but manage the cost of acquiring customers, right? So if you do this in partnership with others, you're doing it on a platform that may already have customers. So you have kind of like an ecosystem approach. Those are all smart ways that you can manage, the cost of doing business, the cost of actually scaling, but you're able to attract customers, make sure that your product is solid. And so even if you start with a freemium model, for example, customers will be willing to pay as you upsell them. Buffer. So Buffer's example here, they are, demonstrating their paying customers, the revenue, the run rate, the margins. Again, super important to understand your margins, right? The margin is that gap between your revenue and ultimately your profitability. And they're also speaking to the users and their growth rate here. The Tinder one is interesting because it's around, if you have a software service, you have an app, right? What's happening in the app? How are you actually making money? And so they're outlining their in-app purchases that they're offering to customers. And important metrics around that is how many people are coming onto the app, how many people are staying on the app. So you want to look at things like the session length. You also want to manage if they are coming in at different intervals, right? Ideally, you want customers to come in and be in the session and have it be for a while, as opposed to coming in and out for short spurts of time, but they're not spending time within the app. So those are all some things to consider. And then the Mattermark example here is one that really talks about the annual recurring revenue. And it also talks about the monthly recurring revenue and the growth rate associated with those. So these give you a couple of different examples where you can see these metrics, especially from a fundraising perspective, if you're in that startup phase, and shows you how others are using this and how you may be able to use that yourself as well. So this is we're all familiar with Threads. This one recently launched. I thought this was a good example of something that's happening real time, right? So this is real time. We're all hearing about it. We may be on the platform already. And we've heard of how quickly this one ramped up in terms of users. So within an hour, there were 1 million users on the app. Within 5 days, there are 100 million signups on the app. And so since then, it's been interesting just to see the progression and the updates coming along with that. So in this news story here, you're seeing that the daily active users, so that's one of the metrics we discussed, the daily active users has dropped, right, since the product just launched. And also the time spent in the app has also gone down. So this gives you an example of, what's happening real time as metrics that I personally look at these from a product perspective as, new things are launching in the market or existing products are out there as well, so that I get a sense and can apply a lot of my own product management knowledge and see how it's happening real time with others as well. So that's definitely something for you to think about as you're running your business and you have your own objectives. Cast a broad net and look out there, see what others are doing, and being able to translate what that means, what that insight is, that helps you as a founder being a lot more strategic in your thinking, because you're not just solely looking at your own business, but you're looking at available examples that are out there as well. And then the last one I wanted to point out here is the Buffer example to the right. So this one has some initial launch info. It tells you a little bit about the users and the revenue over time. And it also shows you, some of the different features that they expose to users, such as those integrations. And then ultimately, not just showing the users, but also what is that translating to in terms of revenue for growth. So I really like this example just to kind of show that journey, but really enriching what that looks like, both from a numbers perspective with your users, but also what is that actually translating to in terms of revenue, because having a ton of customers or a ton of users on your platform, if you're a digital product, does not necessarily translate into revenue. So that's going to be really important. And in this example, so this shows you, once you have your data in place, once you know what questions you want to ask, this should be something that is easy for you to manage, right? You don't want to have to spend all your time figuring out where the data is whenever you have a question or somebody else has a question or an investor has a question. You want to make it a little seamless for you. So having a dashboard that gives you the key information that you need once you've outlined that is helpful for that process. It makes it a lot more seamless. A lot of the data based on how it's built can be automated. So this example really shows you some of the ones we talked about, around your daily active users. You can keep an eye on that. You can see what the trend is over time. Are those daily users going down? Are they going up over time? Are you seeing any movement based on any promotions that you have, any marketing that you have going on? Do you see the change? And then who is using your product? So you can see demographic breakdown. You can see where people are located. You can see which countries they're in. And then as you're getting new users, because again, this is going to be important for you to scale, you want to have more users over time. As you're putting new products out there that may be for additional segments and additional personas, are you actually translating that into new users? So that's something you can look at here and track. And the last one is around just the average session length, because again, I mentioned that's important if you're looking to translate folks who are on your platform into paying customers, being able to upsell them for different products within the app. The amount of time that they spend on there is going to be very critical. And so here, this gives us two additional examples on this slide here. One being a startup dashboard, and the second one is around, the product and sales. So that first one, again, shows you how you can set up your monthly recurring revenue, so you can see what that looks like. It shows you what having your activation rate can look like as well. And then the truly important piece, as we kind of went over, the retention. How does that trend look like? Do you see that, going up over time, or is it going down? You want to make sure you're able to keep your customers happy, keep them loyal, continue to delight them, and make sure that you're not losing customers as much as you may be gaining additional customers. And so this example on the right here, really kind of gets into the numbers a little bit. So as you're getting revenue in, do you know which products are successful? Which ones are your big revenue generators, right? So this can help you break that out. And then you might be able to make decisions around that. Are some products just not profitable and it makes sense to retire them? Or are some of them doing really well and maybe you need to have additional inventory of that available? Or maybe you have it in one geographic location, but you need to expand it beyond that. Those are all some decisions that you may be able to make based on what you're seeing. As you are, let's say you have a product that needs to be manufactured, the units that you sell for those products and the cost of each unit, that's going to be something that's critical. So some of these more detailed metrics can be helpful for you, especially depending on what the objective is. In that manufacturing case, it's going to be really important to understand that you're scaling to a point that you're really benefiting from some of those economies of scale. And so having that unit number and unit metric can help you with that. And then the last piece here is it talks a little bit about the monthly revenue, which is something that we've touched on already, so I won't go deep into that one. But hopefully these examples have been good to just show you, again, once you're setting up your questions, once you figure out which metrics you need, you can create a dashboard or something simple. There are lots of different tools out there to help you manage this, and it's something that you can make part of your process, right? It's not just reacting, but you start your day, you look at your metrics, you see what's happening. So you're seeing a little bit of the details, but it's guiding you to how you need to be thinking strategically, both at the current time, but also as you look forward to for the next quarter, for the next year, for the next 5 years, and you can make those decisions. So, as we take a look here at some of these key takeaways and get ready to close, again, my approach with this session is not to have you, focus initially on the numbers. The goal, again, is to make sure that you feel enabled, you feel like you can make smart decisions. You feel like you have the information that you need. And in order to be able to do that, it's important to know where you are in your process. Which questions do you need to answer depending on where you are in your process? Who are the stakeholders that are involved with you and have questions so that you can make sure you're answering those? So how do you want to measure your business? That's really key. That's a big one. And once you decide how you want to measure your business, which of those KPIs are going to be relevant to you? Which one should you use? Once you have those KPIs determined, what is the formula? Now you start getting into the math a little bit. Like, what is the actual formula? What is the calculation to be able to do that? And once you have that, then this is when you figure out, okay, if I need to calculate my monthly revenue, then I need to know, like the per unit sale price. And then I need to know the number of customers, right? Because you multiply that, you get your total monthly amount, right? So those are, that's really the approach here. So regardless of how you're coming into data, getting to the point that you are enabled as a founder, as somebody who is whether data-driven or data-informed, you have what you need to make that decision. I think this framework hopefully is helpful for you to approach what you need this way. And then, on the back end, you can figure out exactly what the more quantitative aspect of it needs to look like. And so here I've kind of broken down some examples, based on what it is that you need to get clarification on, whether it's around activation and engagement for your customers, whether it's around customer satisfaction, or if it's touching on the financial aspect, you can ask those questions. And there are some representative metrics here that you can use to help answer those questions as well. So I want to say thank you. I know we have some questions lined up, so I will pause for a little bit to have the team kind of walk us through some of those questions.
Great. Thank you so much, Dasanj, for your presentation. We will get started with our Q&A. And I think a good place to start would be these dashboards. Now, I know that you added the source and that the last one we looked at was Gecko board, but can you say a bit more about the kinds of dashboards or where people should look for metrics and the fact that, if you're on Shopify, do you need something different?
Yeah, that's great. And I think it really depends again, based on where you are, how big is your company? Is it just you, right? That's a real question. Is it just you? Because at the end of the day, you want it to be manageable. If you're a lot more mature as a company, you have a team, you may have a data team or have somebody who is well-versed in data, that can really impact what it is and how you approach it. Because you could be using Excel, right? You could be, getting data in Excel with a pivot table, and that may be sufficient. Or you can use something that's readily available and free out there, like Google Analytics. Or you can use something where you may have to pay for it, but it can give you, opportunities to customize, integrate it with other tools or that you may already be using. So, I think it really, again, goes back to kind of where you are, what is your need, how data savvy are you, how comfortable are you? Is it something where you want to be hands-on about, or do you want to have somebody else? Do you want to have a contractor? So there are lots of different flavors of it. At the end of the day, it comes down to what makes the most sense for you. You don't want it to be something that's cumbersome. You don't want to have to have questions. You want the answer, but then it just takes you so long to get between having that question and getting the answer to where, the process isn't really serving you. So I would say, as usual, start small, right? Start with what you have, what's readily accessible to you. Again, you really want to make sure that you embed processes that you can capture data, because if you're not able to capture data, first of all, you're not going to have data to make decisions around. So that's the ultimate starting point, right? Making sure that you have a way to a good system, for example, to track the sales that you're making. And then you can use that data and massage it as you need to and make those decisions and build a dashboard or use something that's readily available.
Okay. And you did just touch on this, if you're a founder who absolutely does not want to deal with this, you want to hire a contractor or company, what kinds of questions should a founder ask in an interview to vet someone to do this?
Yeah.
And oh, sorry, go ahead.
No, yeah. No, that's great. I would say, it really comes down, one, you'd want them to understand your business, right? So it takes a little bit of time, just getting them up to speed about what it is that you're looking for, making sure that they understand your product, because that's the most important thing, is just to understand the landscape, what is it that you're doing, so that you can build accordingly. There's that balance, though, I think, between having somebody who's completely hands-off versus just having somebody maybe doing the manual putting together of it. But I think it's really important that you are still close to your data, especially as you're early on, because that is the information that you need to understand, where do you even fit in the market? Do customers even like what I'm putting out there? Where are my competitors compared to where I am? And so it's important as a founder to be close to the data. But if you need help, maybe in the more like tactical aspects of it, maybe pulling the files and consolidating the files and that level. But at the end of the day, let's say they're still putting together a summary for you, or putting it onto a platform where you have a dashboard. You want to make sure that you understand what it is that those numbers are telling you, because on the surface, depending on how the data is pulled or how it's summarized, the story may be very different, right? So I think spending upfront time with whoever you may be bringing on to help support you, understanding the build and maybe directing the build so that you truly get what you want, but you can be a little bit more hands-off if you need to. And then really just having the data be something that's transparent as well. So if it's summarized and high level, you can still kind of break down and get into the detail as you might need to.
Mm-hmm. That's great. And speaking of details, what would you say to founders who need to, or who maybe are thinking about how best to check in on themselves, that they're not getting too far into the weeds with the data? I mean, these platforms can tell you so much. So how do they kind of they get to a point where they're not feeling inhibited,
Yeah.
and can still kind of not be frozen?
Right. I would start, from your overall goal.
Mm-hmm.
What are you looking to get out of your business? What is your North Star? What are you trying to accomplish? And maybe that can be really broad, like your overall vision, but then breaking that down a little bit into, for this year, for this quarter, for this month, what am I looking to strive for? And having that, once you set that up at the beginning, and that is kind of your framework and your goal, then as you move forward, okay, next week, let me take a look and see what's happening. Let me see how I'm tracking against this goal that I've set up. And then next month you can look back, and just have these touch points where you can make time to look at the data. So maybe it's not every day, but maybe you're looking at the big picture, at those monthly, at those quarterly, at that annual interval. Because what can happen, you may be either super into detail, but and not seeing the big picture, or you may be really high level and not into detail and be missing what's happening, right? So if you're super into detail, you may be moving, but is that the right direction that you want to move at a high level, right? You could be moving, but maybe you're moving east when you actually intended to be moving north, right? So it's important that you kind of balance the two, right? Understanding what you need from a high level perspective, but then really making sure that the detail aspect of that matches up as well. And then really blocking, I would say, some cadence so that you do have that as part of your process. It should be ongoing. It should not be something that's ad hoc. Your data is super important, not just to understand, like I had mentioned, your success, which is kind of what you've done, right? So, in terms of your revenue, your profitability, what have you done, but also being able to use the data to make decisions going forward as well.
That's great. Thank you. And do you see founders focusing on any kind of bad data or irrelevant data? And then what should they be focusing on instead?
Yeah, so it's very easy to get caught up in some of the shiny objects, I would say, right? And I touched on this a little bit, where you may have a ton of customers, or you may have a lot of people, on your platform using your product, but are you really getting the right outcome, right? What is your goal and target for your customers? Do you want them, is it just, do you have maybe a collaboration with a partner to where it's around engagement and that's what you need? Or are you really trying to convert them for sales? And so you need to not just have people on there doing things, but they're actually buying. So that's really important, to make sure that you're not missing what it is that you're aiming for and you're focused on the right metrics. So that's why it's really key that, based on what it is that you're trying to accomplish, you get the right metric, not just metrics that everybody is talking about, right? So in the example that we talked about here, where, in 5 days you have 100 million users, what does that actually mean for you? What does that translate to? Are you looking to just have them engaged again, or are you actually trying to have them buy your products or things like that? So that's really key, is just making sure those two things match up.
Yes, yes, that's so helpful, and I think Threads really was a great example of that for our real world, and what's happening around on our phones.
Yeah.
Okay, so what tools would you recommend someone use to assess competitors' data? I think that competitive research part can always be a little bit tricky.
Yeah, absolutely. So, I would say for competitive insights, it can be a combination of qualitative things, or it can be a combination of quantitative things as well. It could be things like, price points in the market. How does your product that's similar to somebody else's product, how does it stack up in terms of your price point? Like maybe you're too high, maybe you're too low. You need to figure out that balance, right? And that's something that you can test. You can ask customers and give them the options, 3 different products at 3 different prices. Which ones do they prefer? So that's something you can actually validate. You can also look at positioning. How are other products and other companies positioning themselves? Are they really focused on, kind of like that service that they provide to customers? And it's about, being able to call and have a dedicated person, speak to you and reach out to you for your issues. Are they prioritizing things like that? Or is it something else? Is it like the user experience so that it's super seamless? Is it convenience that they're prioritizing? So these are some different elements that you can look at to see where you fit in, because it may not necessarily be just a quantitative thing. It's not just, okay, the size of the company or the revenue it's bringing in. That those things don't really necessarily tell you what you need. But the key, I think, with competitive research and competitive intelligence, it's about being differentiated. And there are different ways, again, to be differentiated. You could do that based on the service that you provide, your customer interaction, your return policy. Prices is hard to is hard to be that one thing that you're competing with others on. So it's about, again, I think somebody had something in the chat around value, and it really comes down to that and what it is that your customers need, and being able to identify what that value is for them and provide that and as something that's going to be differentiated from what others provide.
Great. And on the subject of customers, are some kinds of or sources, I guess, of customer data more important than others? So looking at survey responses versus what you're seeing in sales or perhaps like website usage?
I think it comes down to a combination, right?
Okay.
Because you can't, I mean, even survey data, what's really interesting behind all of this when you're dealing with customers is the psychology. We don't always know what we like, and we don't always know what we want. And so when you ask customers this, they might tell you one thing, but then they're doing something completely different, right? So it's important to engage with them, look at how they're using your product, watch what they're actually doing, because maybe your product is not necessarily addressing, all the things that they need to do, all the tasks, for example, that they need to accomplish. Maybe it's solving 1 out of 6. And so, you see them grab a pen and a paper to kind of fill in the gap for the other steps, because you're not really filling that. And if you ask them the question and, and tell them and ask them, is this helpful for you? They might say yes, but what they're not going to tell you is some of those gaps in terms of how they're using it or how they're not using it. So it's really important to not just rely solely on that. It's important to talk to customers. It's important to hear from them. And also when you do have an opportunity to watch them interact with your product, how are they looking at, how are they using it? How are they, unboxing something? What does their facial expression look like? How are they clicking through your website? You might have buttons on there for actions and you expect them to see it, but it may not be designed in a way that they naturally will gravitate towards that, or their eyes will see that. They might miss it. It might be a drop down and it's just not in a way that's clear for them to see that. So it's really like those are things that don't come out. People don't know that they're going through that process when they do. And so when you ask the question, you don't necessarily get those answers. And so again, I think it's really just looking at that data in general. And that's where it's important to not just be data driven, right? Because if you're looking at the survey and what the survey says, there might be more to that, and you might really need to enrich what it is that you're pulling in to make that that decision and that draw the real insights and what exactly is happening.
Yeah, I really appreciate that. It sounds like data is more than just numbers and sales. It's really about that kind of person-to-person interaction and being out among your customers, because we're not our customers. So I think
Yes,
that's
yes.
such a great thing to stress.
And that's so important. That's so important because I will say this, and I'm sure that everybody can relate to this, is when you have a product, when you have a business, that is your baby, right? And you love it. You've been, looking at this, you've been doing all these different iterations, trying all these different things. So you're very passionate about it, but you're in business to be profitable, to help others, to serve your customers. So it's important that they are able to find that value in it, and not you and kind of your love of what you've taken on and your passion around it overshadowing what's actually happening. So it's important to be able to kind of step aside a little bit and be objective and have your customer tell you what should be done next, how it's going, how it's resonating with them.
Okay, and so we are running out of time. I think we can squeeze in this last question. How often should you be adjusting your strategies according to new data?
Yeah, no, that's really a good one, because I think it depends. I don't think it's as easy as saying, every month, every week, every quarter type thing. But I think you need to look at it but as you're looking, give it enough time to where you're not reacting. If you see something in a week, that may not be the reality if you look at it, over 2 weeks, over 3 weeks, over 4, right? So there's that balance too. As you see something, you need to allow some time that you can see trends. So you can, see if it actually is going down or if it actually is going up, right? One single data point is not going to tell you that. So I think it really depends. If you notice something, if you're keeping a close eye and you notice something, that's awesome. So you can catch it and be proactive, but give it a little bit of time and see what it's telling you over time so that you can truly make that decision.
That is great.